You work hard for your money. Your income comes in every month. Your salary arrives and your bank account finally looks healthy again. For a moment, it feels like progress, but then the bills start getting paid. Expenses come out one by one. Rent, utilities, groceries, fuel, subscriptions. You try to put something into savings, and you still have debt payments waiting. A few days later, your bank account looks almost empty again. And suddenly, the money that felt like relief just feels like survival. If you've ever wondered why your bank balance drops so fast, even when your income is steady, you're not alone. There's a strange moment that happens to almost everyone. You check your bank account on salary day and feel calm. The number looks solid. It feels like control. It feels like security. But then a week later, you check again, and the balance is much lower than you expected. You start thinking, where did all the money go? Nothing unusual happened. You didn't buy anything expensive. You didn't go on a trip. You didn't make a big purchase, and yet the money disappeared. Think about it. Most of your money is already spent before your salary even arrives. The rent is waiting, the electricity bill is waiting, the internet bill is waiting, the car payment is waiting, the credit card minimum is waiting. Even groceries are predictable. Your income comes in, but the expenses are already lined up to take their share. Payday feels less like earning money and more like distributing it. This happens to a lot of people. The biggest reason your bank balance drops fast is fixed expenses. These are the bills that never change much. Rent or mortgage, insurance, school fees, loan payments, utilities. These costs quietly take the largest portion of your salary. And because they happen every month, they stop feeling noticeable. You don't remember paying them, but your bank account does. But here's the problem. Fixed expenses keep rising slowly over time. Rent increases, prices go up, service charges get added, subscriptions become slightly more expensive. You don't feel it all at once. It happens little by little, but your salary often grows slower than your expenses. So even though your income looks bigger than before, your money feels tighter than ever. Then there are the small daily expenses that almost nobody tracks. A coffee here, a ride there, food delivery on a busy evening, a quick online order, a few convenience purchases during the week. None of these feel like big decisions. Each one feels harmless, but together they slowly drain your bank account. You've probably felt this. You open your banking app and see several small transactions. $5 here, $10 there, a few small purchases every day. Nothing shocking, nothing dramatic, but when added together, they explain why your balance dropped faster than expected. And small expenses don't feel painful because they happen in small pieces. Paying one large bill hurts. Spending small amounts feels normal. That's why daily spending is easy to ignore, even when it has a big impact. Another reason your bank balance drops quickly is timing. Most salaries arrive once a month, but expenses happen every day. Money flows out continuously while income comes in only once. That means your bank balance slowly declines from the first day after payday. Even if you spend responsibly, the balance naturally moves downward. And psychologically, that decline creates stress. Seeing your bank balance go down makes you feel like you're losing progress. Even if everything is normal, it feels uncomfortable. You feel pressure even when you're doing nothing wrong. This is why people often feel relief on payday and anxiety 2 weeks later. But there's something deeper happening. Modern life is expensive in ways that aren't always obvious. Years ago, people paid fewer recurring costs. Today, many people pay for internet, phone plans, streaming services, apps, cloud storage, and digital subscriptions. Each one feels small, but together they become permanent monthly expenses. Think about it. Every subscription is a small monthly bill that never stops. $10 here, $8 there, $15 somewhere else. Individually, they seem harmless. Together, they become another fixed expense category. Then there are unexpected expenses. The car needs repairs, a medical bill shows up, a household item breaks, a gift is needed for a family event, a school expense appears without warning. Life rarely follows a perfect budget. Unexpected costs make your bank balance fall faster than planned, and because they are unpredictable, they make money feel unstable. This happens to a lot of people. You plan carefully, you try to control spending, but real life interrupts the plan, and suddenly your savings don't grow the way you expected. And then there's something called lifestyle inflation. As income increases, spending quietly increases too. You upgrade small things, slightly better groceries, slightly nicer clothes, a better phone, more convenience, slightly more comfort. Nothing extreme, nothing irresponsible, but the total cost of living slowly expands to match your income. So even if you earn more money than you did a few years ago, your bank balance may still drop at the same speed. It's not because you're careless, it's because your lifestyle adjusted without you noticing. You've probably felt this. You earn more than you used to, but you don't feel richer. You don't feel ahead. You just feel like you're maintaining your current life. Another hidden reason your bank balance drops fast is that saving happens last instead of first. Many people pay their bills first, cover their expenses, and then save whatever remains. But often, there isn't much left. Saving becomes optional instead of automatic. And without consistent savings, every expense feels heavier. When your savings are small, even normal spending feels risky. Every payment looks like a loss instead of part of a plan. This is why two people with the same income can feel completely different about money. One person feels stable, the other feels stressed. The difference is often savings and financial cushion. But here's something important to understand. A fast-dropping bank balance doesn't always mean you're bad with money. Sometimes it simply means your financial system is tight. Income covers expenses but leaves little margin. There's no space for mistakes, no room for surprises, no breathing space. And living without breathing space creates constant pressure. You check your bank account more often. You think twice before spending. You calculate costs in your head. You delay purchases. You wait for the next salary even before the current month ends. That feeling isn't failure, it's financial tension. And financial tension is extreme.